Walgreens grew revenue on a year-over-year basis, which was pretty shocking considering the previous year they had been obviously doing a ton of sales of tests and, the pokey things, okay? And so I was actually amazed that their numbers weren't impacted. And in terms of going forward, the company just reaffirmed their full-year earnings guidance. So all that talk, all that trending on Twitter, all those people mad at Walgreens, boycott Walgreens, and it looks like it's not going to affect sales whatsoever. Company reaffirmed full year guidance, like what you got to go off of when it comes to that, okay? So do take these things with a grain of salt in regards, I mean, at the end of the day, there's some people mad, maybe there's some people happy. At the end of the day, guess what? It's massive free advertising. Like no one ever talks about Walgreens or Target. And all of a sudden, it goes viral and everybody's talking about it. It gets on top of people's minds. So you would even look at it as a negative, like, oh, maybe some customers are going to be really mad. They're going to boycott. They're not going to go to the store. And you can also say, well, maybe a lot more people go to the store because it's top of mind and it's being advertised like insane, like in a viral trend that they didn't even have to pay for. You know what I mean? Like everybody's just talking about it, and that's the type of thing, right? Now, in terms of stock price, it can definitely hurt your stock price, okay? It might not affect your actual revenues and your profitability unless you're Bud Light. That's a whole different situation, right? But in terms of stock prices, no doubt it has affected Walgreens stock price, okay? Walgreens stock price entering the year was around $37. Now it's $30, okay? Now, it's a great buy. It's an easy buy, 6% plus dividend yield, but there's no doubt the stock price has been affected, in my opinion, at least in some capacity due to that. Also, the other thing that's impacted Walgreens stock price is just the fact that you can get 5% on treasury. So a lot of people say, why do I need to own Walgreens stock to get 6% dividend yield when I could just buy a treasury? It seems risk-free, right? So anyways, okay, I went to Target and I had to park way behind a lot of people, as always, okay? I could notice I've been at Target 30, 40 times in my life, maybe more, okay? I could tell you I noticed no difference in the amount of cars parked on a Thursday afternoon than any other time, okay? So take it for what it is. Who knows, maybe it affects Target's business a little bit. All I'm telling you is I drove to my local Target and it wasn't like I could say it was busier or less busy than it ever is on you still got to park way dang far away. That's all I know about that, okay? Now, in regards to Target, valuation-wise, okay, here's what we're looking at. Now, they're already in their fiscal 2024, just so people are aware, okay? Stock's trading at about a 15 to 16 range forward P for this year's numbers. Next year's numbers for fiscal year 2025, right? They're trading at about a 12 to 13 range forward P. Now, you got to ask yourself, is that really high? Well, who's Target's most direct competitor? The most direct competitor to Target is a company named, let me guess, come on, Walmart. Thank you very much, okay? Walmart. So in regards to Walmart trades at about a 23, 24 this year's, fiscal 2024 numbers, and then a 21-ish next year, right? Now, that's intriguing because here's a situation where Target's trading at a far cheaper valuation, just far cheaper, but is actually expected to have better growth going forward than a company like Walmart. So if you were just looking at it on a valuation basis, there's no doubt like Target's a great opportunity right now, like a great opportunity and a much superior opportunity than something like Walmart. But we also got to think about the business, okay? Now, as somebody that came from retail, studied retail for a million years, okay, I can tell you with the in-store experience, Target is absolutely destroying Walmart, and it's not even close in terms of in-store experience. The Target experience they're the most well-run retailer, in my opinion, with in-store experience probably in the world right now. Basically, now they're actually doing a lot of their stores with Ulta stores inside the Target stores, okay? And, beautiful Starbucks locations in many of these Targets now at this point in time. The whole design is definitely a level up, probably a few levels up from Walmart. I mean, if I go to a Walmart, it's still the same experience that I remember when I was a kid going to Walmart. Target's evolved in a massive way over the years, and they've done phenomenal. So the in-store experience, Target's destroying Walmart. Now, in terms of store pickup and shipping to your house, I can't say one's really better than the other. My wife sometimes orders from both. She orders more from Target in terms of store pickup and in terms of online stuff. I can't really say Target's better than Walmart or Walmart's better than Target. It all is what it is. At the end of the day, Amazon kicks both their butts in terms of, getting something to your house as fast as possible and with inventory and many times even with pricing, okay? So that's that as far as the business overall. Now, in regards to Target, they could have a better balance sheet. They have about $1.3 billion in cash and cash equivalents. Their total equity on this company is about $11 billion. Their balance sheet's okay. That's the way I would describe it, okay? But at the end of the day, is Target a money maker stock, right? Here's what I'll say about it. It's a simple, easy buy the next 6 months, okay? Do not expect insane returns from this stock. Like, this is no Palantir, this is no Nvidia, this is no Tesla stock, okay? This is none of those. But with that being said, I think it's pretty dang easy money for the next several years. And this is one of those stocks like you can look to just add for the next 6 months, throw it in the filing cabinet, forget about it. The dividend yield's great on this company, 3% plus yield, and it's an easy money buy. I really like it a lot. Like I said, don't expect I'm going to quadruple my money over the next 5 years. It's not that sort of company, okay? But can you potentially double your money between what the share price can gain and what you'll get in dividends over the next 5 years? I wouldn't be surprised at all, okay? Alrighty, that covers Target. Even if I look at my own personal portfolios, I have stocks that are in an epic bull market and I have stocks that are in an epic bear market right now. A good example is Meta, right? Meta is in an extreme bull market right now, okay? Meta's in its own game. I mean, this is a stock that, now we're up 122% on. We're now up $273,000 in this stock. And it seems like it just goes up day after day after day after day. I think the stock's, $273 or so here today, right? Is the stock $400 by year end? I wouldn't be surprised, to be honest, especially given what I think's coming for EPS down, these next few quarters. I wouldn't be surprised if 400 is coming. And that stock seems like it's up day after day after day. Meanwhile, Revolve is a stock I own that's doing absolutely horrible. Yeah, we're up about 42% on the position, but let's not forget we were up a lot more in the past on this position, right? This stock has lost about 40% of its value this year. Revolve stock, RVLV, is in an epic bear market for that stock right now, okay? It's the complete opposite of Meta. Meanwhile, Tesla is in a massive bull market for the company right now, right? Up 97% year to date. 97%. That's basically investors saying this one got way oversold last year, and ultimately their business is going to be a lot better next year than it is this year, right? Remember Cybertruck coming down the pipe? I wouldn't be surprised, right? Up 97%. Meanwhile, look at a stock like Oatly I own, right? Down 15% this year. Down double-digit percentage. That one just can't do anything right now, right? In terms of the stock price, at least, right? You look at a stock like Palantir, 127% gain year to date, right? We were in the red in a quite a substantial way on Palantir, right? At one point, and now we're in the green massively. I mean, this stock's doing tremendous now at this point in time, right? We're up $32,000 in this position. Now you go ahead and look at something else. Look at Foot Locker, right? We're now red on Foot Locker, right? I'm down 4% on this stock. And going into this year, I was up very nicely in the green. This stock's down 31% year to date, right? This just goes to show you how much of a divergence we have in the market, folks.